Welcome traders, I'm back again with another video. On this episode, I'm going to teach you how advanced smart money traders mark their structure. This is very important, and this is the same way that ICT mark his structure. This knowledge is not out there. Nobody know of this, so I'm going to teach you guys how to mark these structures so that you can be able to improve your strategy in the market. We all know that for your strategy to perform well in the market, it all depends on the structure, how you mark your structure, how to identify how we are on the downtrend or uptrend and those kind of stuffs. That's going to help your strategy to perform well. So you don't have to be selling when the market is bullish or buying when the market is bearish. We all have to understand these kind of stuff. So I'm going to teach you right now. In this scenario, this is an uptrend and this is a downtrend. This is what we all know on the internet, that we have a higher high, a higher low, higher high, higher low, higher high, higher low, with a break of structure right here, another break of structure right here, another break of structure right here. And when it comes to the bearish, this is a break of structure, a break of structure, and another break of structure. And we have the lower high, lower low, lower high, lower low, lower high, and lower low is going to be here. We all know all these stuffs, and these stuffs have been misleading us in the market. Market actually doesn't move this way. Market move differently. So I'm about to show you the second diagram so that we all can be aware of it. Something like this. This is very complicated, right? Because we have different things all together in this. And this is how advanced smart money traders mark their structure. They mark it in a systematic way or a mechanical way. Each and every time when inducement is not being taken, they don't take trade. You also have to learn it that way. When inducement is not being taken, there is no way for you to buy or sell in the market. Look at this structure mapping right here. You can see price move up and move to the downside and move up, and advanced smart money traders mark this one as an inducement. When price come to this low, under this low right here, that's when advanced smart money traders look for buy opportunities in the market, because they believe when market is willing to go upside, market have to take liquidity, and this inducement right here is serving as a liquidity. Market have to take this liquidity to get more fuel to move price, or more or less more money to move price to the higher side. I hope you all get this thing. When market did not take this inducement, this high right here is not going to be confirmed a structure point unless this inducement has been taken. So when price take this inducement, this high right here is now confirmed a higher high, and we expect market to move and break this high right here. So another inducement is going to be here on this diagram. Another inducement is going to be here, because this is the first pullback after this break of structure right here. So after price take this first pullback right here, this structure point over here is going to be confirmed a structure point. So price move down, take this inducement. This is more liquidity in the market. Price got more forward, push price higher, creating this first pullback right here. Price break it. The reason why this high right here is not regarded as a structure point is because price didn't take any inducement. Now that price has taken some inducement right here, this high right here is going to be confirmed a structure point. So this is the move right here, and this is the first pullback right here, and this is a turning point that move to take this liquidity. So this point right here is going to be regarded as what? A structure point. So you can see how the structure is being mapped over here. Let's move to the bearish side. The same thing happened when this inducement is not being taken. This point right here is not regarded as a structure point or a lower low until this liquidity right here, which is the inducement, is being taken before this one can be regarded as a lower low. And that goes on and goes on. Price broke it right here, broke this, which is a break of structure. Price move up, take this inducement. We regard this one as a lower low right here. Sorry. We regard this one as a lower low right here. This one is not regarded as a lower low because price move up did not take any inducement and price break to the downside again. Pullback take this place as an inducement, and this one is now a lower low. Price then break it to the downside and it continues that way. So now I'll be taking you to the chart so that you can see how it is being drawn on a chart itself. So I'm going to start from this point. I drew everything on the chart already because I don't want to waste much time of yours. So after this bullish price action, when price wanted to continue moving to the upside, price have to seek for a liquidity for price to take before moving to the upside. This is a turning point. After this inducement was being grabbed, this high here is going to serve as a higher high because this is the high that led price to take this inducement. So after price took this inducement, price moved to the upside, break this structure right here, and now this is a break of structure. So after the break of structure, we are looking for inducement or liquidity for price to take before moving to the upside. So we have so many liquidity along this line, but we want the major inducement or major liquidity point for price to take before moving to the upside, and these serve as a major liquidity point. After price took this major liquidity point, which is inducement, price moved to the upside and break this structure right here. So price have to seek for liquidity again or inducement. Price move further down and took this inducement right here. This is a valid pullback, and on this line we have this low over here, another low over here, a valid pullback, a valid pullback. The first one that is near to the current price action over here, that's going to be the inducement after the break of structure. So price took this inducement and moved to the upside and broke this high over here. So this is now the break of structure. I hope you guys can see the inducement, how I'm marking this structure. That's how you're going to mark your structure mechanical way. That's how we're going to do. It's like a strategy. When you're marking a structure this way, you're going to be very, very active in the market because you're marking it mechanically. You know what to look for. You know that what price have to take the first pullback after a break of structure to be considered an inducement or a liquidity point for price to move further to the upside. So when you are a trend trader, you wanted to buy price so that price can go to the upside, you just have to look. You don't have to buy over here because you've seen this bullish price over here. You have to wait for price to take inducement first. After price take inducement, then you can look for your buy opportunities around here. After price took this inducement, price move further down. You can see price came to this order flow right here. Price came to this order flow. Then you can look for your buy opportunities to buy price to the upside. I hope you get me clear. So after price took this, break this high over here. Where is the inducement? This low right here is a valid pullback. Price took this valid pullback and moved to the upside. Price broke this structure again. So after this structure is broken, we want an inducement for price to take before moving to the upside. These are inducement right here, but we want the first one to the nearest price action, and this seem to be the nearest one to the price action because price moved to the downside, and you can see price has taken the high over here, and this one is serving as an inducement. So price took this inducement break to the upside. So after price break to the upside, we want an inducement again for price to take to continue the uptrend, and this seem to be the inducement right here. Price took this inducement, but price was unable to break to the upside and price break down. You can see right here, price breakdown. This one is being considered a higher high because price took this inducement. After price took this inducement, this one is a higher high, but price then failed to break to the upside, right here, but price rather break to the downside, which is a change of character or a shift in market structure. So this one is now, this is when price moved from to take this a major inducement. So price took this major inducement, price moved to the downside, broke this structure right here, and this is an inducement, a valid pullback as well. You can see this is a valid pullback. Price moved something like this before moving to the downside. Price took this, react to this other block, move to the downside. Let me do this example so that you can see. When you wanted to sell in the market is moving to the downside. Price move this way, move this way, move this way, Don't think you are going to buy here over here without taking this high over here. Wait for price to take this place and show you action that I'm going to the downside, a shift in market structure, a shift before you buy somewhere here to take this low over here. Because we know price has taken a major point of liquidity and price is giving a sign of moving downwards, we can sell over there. But when you try to sell over here, then you are going to be the liquidity. I hope you get it clear. When you want to sell over here, you are going to be the liquidity because there is no inducement over here. There is no inducement. Price didn't take any inducement here, and you are going to be the inducement if you try to sell on this other block over here. So wait for price to take this high and show you a confirmation that price is going to the downside before you sell for this low to be taken. So this is what I want to share with you guys. I hope this is going a long way to help you. Practice this, backtest this, and you are going to see that it works. It works. It works. This market is based on liquidity. Where the money is, where orders are. And these orders over here, this inducement here, people are selling over there, people are buying over here. Let price take this inducement and show you that I'm moving to the downside before you sell. Like what I've said over here, when you wait for price to take this inducement and give this rejection over here, this over here, you can move to the lower time frame to see the intention of price, the down intention of price. Then you can sell to take this low over here. And the same thing applies to this one. Price took this inducement, move to this other block, this rejection happened, you can say no, price is moving to the downside, then you sell. And that's going to go a long way to help each one of us. Thank you guys for watching. Bless up.